All right, good day, amazing people. It's been an honor, a privilege to have you again in this YouTube class or bootcamp tutorial on Forex trading. Welcome back to SFX Academy, where we raise profitable traders. My name is Jason Samuel, and today's section we'll be diving into one of the most important concepts in price action. Most important concept in price action, and it's called market structure. So, but before we go into that, if you have not actually subscribed to this channel, kindly subscribe. Kindly do us that favor and subscribe. Okay, subscribe, like, and help us to reach more viewers out there. So if you ever wondered how to tell when the market is trending, when it's just pulling back, or when it's truly reversing, this class will bring that clarity. You know, over a period of time, we've understand that market is actually either buying, selling, or consolidating, right? But how do you actually mark out those effectiveness, like knowing when to actually buy, when to actually sell, right? Now, you said that when market actually creates major highs and major lows, right? We said it's an uptrend, and we also said that when market creates lower lows and higher lows, we said it's a downtrend. Those are what we learned on the basics. Okay, so what is now market structure? What is market structure? You need to first understand what market structure is before you say you are buying, you are selling, you are buying, you are selling. All right. So market structure refers to how price actually moves. Okay, the patterns of these highs and lows that we said the market actually does. That is what we call market structure, and it's very, very essential. Very, very essential. You cannot do without market structure. Okay, because it's the foundation of price action, and it helps us to answer so many questions regarding price. At least 3 major questions. For instance, it helps you to understand if the market is actually trending or consolidating. So it answers that question for you. Is the market trending or consolidating? We said that market is in two phases, right? A trending phase and a ranging phase. The trending phase was what we divided into two parts, which is the down, which is the bullish, and the bearish. Right? Market keep doing this consistent higher highs and higher lows, right? Which shows that the buyers are in possession. This is a market that is going up. Right? That is going up is bullish, right? Why for downtrend? When you see that market continue to form consistent higher lows and lower lows, right? Consistent higher lows and higher lows, which we say that market is bearish. That market is bearish. Now, the third aspect is the fact that when you see that market moves in sideways movement, that is, market will keep failing to break major highs and to just be ranging within the zone. Okay, it can come here, fail to break this hole, do something like this, and you see like what's really happening. This market is not giving you a clear direction. It's not giving you a clear direction, right? And we said that this sideways movement, you don't want to be caught within it, because it's really going to be frustrating you, right? Though there are ways at which you trade ranging market, you trade within zone, okay? But what best is the fact that you trade the breakout of these zones, okay? The breakout of these zones. When I mean that breakout of these zones, the market can break out, means it gives you a clear direction of where it wants to go, and it can do that in two different ways, or even in multiple ways. So let us do it so that we will not won't be say, oh, Sam says just two different ways. It can create different move for you before breaking out or showing a clear direction. But two major ways are very, very essential. You will be seeing repeatedly if you train your eyes to see them. One, you want to see that market actually do a valid break. Okay, let me just use this upside. Do a valid break and then repeat itself like this. Okay, make this line where it has been testing zone before, look at the support level, then break it high again. Okay, meanwhile the market also can do what's it called, the market also can also decide to just manipulate. Okay, when we get to accumulation, manipulation, and distribution, you can just try to manipulate. It means you just give fake move out, pull up here. Let me delete this so that we can have something clearer to explain that. So the market can do a fake pull up, right, before coming down and giving you and going into the direction. You know, we said that the seedling session at times, I said that the seedling session at times actually creates liquidity for the market to actually what take out in London section. So we must pay attention to some of those things. So the market, these are ways to actually look at in break in ranging markets. Okay, so take note. One of your classwork or your assignment is the fact that go and identify a trending market, that's the buy and the sell model. Then also identify a ranging market. Okay, a ranging market. So we'll be dealing with that subsequently. Okay, but identify it. Go to a 4 hours time frame and identify them. All right. So now when this market actually moves, okay, when this market actually moves, there are things you need to terms you need to understand. Okay, there's basic terms you need to understand and put your mind in. Okay, the first major terms you want to understand is that there's what we call the impulsive move of the market. Oh, I have a structure here. Okay, let me just use this instead of just deleting. Let me just use it to explain. That was called the impulsive move of the market. Impulsive move that when market actually breaks this high and trade up, this first leg movement is called the impulsive movement of the market. That means it shows a clear, longer direction of where the market is going. Then this coming back to this point is all called retracement, or we call it pullback. Retracement or pullback. Now again, it's come. Let me just draw the chart. Let me just draw it. I think that will make it. Oh, I have a lot of chart here. Okay, again it comes and retrace down here. I just hope you are getting it. It retraces down here again before pulling up again. This second pull up again is also an impulsive movement, the impulsive leg, and this coming down again is a pullback or retracement. Okay, now market, each eyes the market breaks, it breaks it, and we call it break or market structure. Let me just delete this and draw. I think that will make it more clearer for even for me to explain for you. All right, so just give me 1 minute. Just give me 1 minute. Give me 1 minute. So continually and every day, keep me on fire for you. Consistently and every day, keep me on fire for you. I want to burn, oh, I want to burn for you. All right, so let's go on. So we have this market breaking this major high, right? After breaking this major, break this high again, come retrace a bit, right? This retracement or this return back here is what we call pullback. Okay, and what it does is find that market cannot continue to go up. Even if you say that market is buying, that's an uptrend, it will not continue to go up like this forever. If it does that, that means everybody will just be in profit. It does not want everybody to be in profit. That's just the truth. You want to fake some people. You know, when you play football, they say they give you leg over. Just that random move now. So it just trying to fake something like, come on, I'm not going this direction, I'm going this other direction. And you just feel like, I'm tired of this journey, I want to go and rest. Okay, so after the impulsive leg movement, the market actually retraces, and this retracement is what we call pullback, or this coming back is what we call retracement. And what does it mean? The market's actually going on a journey, right? It's going on a journey, but it's reached a certain level and it felt like it's tired and need to reset its mind, reset its psychology, change its clothes. All right, before continue in that direction, right? So the market do this, come down here, then go up again. Yes, I know some things will come to your mind that well, we've seen that some people have traded, but feel like a market will just come and take down this low before going again in this direction. Yes, very much possible. We will explain that one as we proceed. Okay, we'll explain that one as we proceed. But the thing is the fact that you always see that consistent break up. Now each break up like this is what we call break of structure. Okay, break of structure, each break of structure, right? It will keep breaking highs. It's what called break of structure. Okay, we call it break of structure. You always see that the market keep breaking structure, right? Market keep breaking structure. Market keep breaking structure. You always see here market break structure again. Okay, now you don't always see the market breaking the low, right? You don't see the market breaking the low. When market breaks this low, like this, right? It's telling that it wants to change direction. That's what it's telling you. That's the first thing that will come to your mind. It does not mean that market has changed direction, but then that market wants to change direction. Okay, market wants to change direction. When it changes direction, it's what we call reversal, right? So, but now it has not reversed. It's just that I felt like this journey I'm going is the wrong direction. Let me change my direction. I'm thinking of changing my direction. They said that no matter how long you go in the wrong direction, you will not get to the right direction, right? You will never get to the right direction. So it felt like, okay, possibly I'm going the wrong direction. Now I'm thinking like, I'm contemplating. It's like I've missed road, right? Now, at the point of contemplating, this is the contemplation, and it decided to calm down. It said that I'm contemplating. Now, after it reached here, it said, oh, I've missed the wheel. Now, it will retrace. Now, this retracement bar, you want to see it that it does not break this high for you to be sure that it's actually changing direction. That means I want to see it that it's come within this area and it actually breaks second break. Now, this break here now is what we can now call change of character. Okay, it's what we can now call change of character. Well, in most cases, okay, market can do like this for us. Market can do like this. I'm saying this is a bullish scenario. Market can do like this. Okay, keep going like this, right? And then break this, come back here, and continue like this, right? Now, when market do this is another model, right? When market do this, you don't confirm here as break or change your character until it gives the next move. The next move now, okay, it's already break this high. Which was the next move? Because assume it didn't break this high, you click change your character. But market now broke this high. So at this point now, you don't call this change your character, you call it inducement or liquidity grab. So when market now comes like this, and I do something like retracement like this, and now go up. I think I have a structure, some model structure, because I was trying to do this video before. I discovered that I didn't actually record. My recording was not recording well. Alright, so let me go check now to avoid stories that touch. Okay, so I think we are on track. Alright, so now look at this market. Look at this. This is a breakout. These are three different models that I draw here. So let me explain them. Now, see this market. This is what a break structure here, right? Created a high, break structure, created a high, break structure, created a high. This high actually come here and grab this and created another high, break of structure. This is the liquidity grab. This is not change of character. Okay, this is liquidity grab, not change of character. So you must train your eyes to know when market is actually creating change of character or it's actually doing break of structure or liquidity grab rather. Now look at this second model here. Price created a high, broke structure, break structure again. Now created a low. Now the moment you see that this price now failed to break this high and actually create this low, okay, that moment you should be thinking in your mind immediately that this price will break this high, this low rather. And once it breaks this low, confirm you want to see the retracement pulling up to this low high, okay, and creating another lower low. This is where you will now enter and target this low, okay, and target this low. or if the price is still in that direction and target continuous lows. Now look at this other structure. Market break structure here, break structure here, break structure here. Now fail to break high. No, it has done what's it called? It has done an inducement, right? Or what call it change of character, because you felt like market actually creates this low, right? Because it's this one now fails to break this high. What did it do instead? It's just again stay here. Automatically, we are anticipating that this price should break this low. But now the minute it's top forming now, it refuses to break this low. Now the question will be like, how do I know that it will not break lows, right? It will not break lows. Okay. Now I will explain that. When we get to the chart, you will see something very interesting. Okay. Now it fails to break this low. When you see that it fails to break a low, change your mindset again. Change your psychology again that okay, this market is no more bearish, or it's not trying to be bearish, it's trying to be bullish. Because at this moment that it fails to break this low again, shows you that this market is actually going to break this high. And the moment it breaks this high, even if it does not break this high, know that your market is bullish. And it will come down here, retrace a bit, and then continue in the upside. I hope that is clear. So now, the ability to be asking like, okay, so how do I know when retracement actually ends, or how do I know when reversal actually begin, right? Good. Before we move into that, I've explained impulsive move, right? That the major legs in the direction of the market, right? In the direction of the trend. That's an impulse move or impulsive move, okay? Why the correction? This is the correction, which is also a retracement, or we call it pullback, okay? Then we understand that this is break of structure. Every breaks above a high or in a uptrend is a, what's it called? Holy Spirit. It's a break of structure, right? It's a break of structure, BOS, okay? Why change of character has to do with when the first sign of reversal. The first sign of reversal. And please, the structure shift, which is the first sign of reversal, does not mean that market has reversed. It's telling that I feel like reversing. So what you are waiting for the second break, because that sign of reversal can be liquidity grab. Okay, so price can just come in. Now you see some people probably just come and tap in straight into their SL and now go into their direction. You feel like, but I was correct now. That is liquidity grab. So we see many of that on your chart. Okay, so let's go to the chart and let's see some things. All right, observe USD is still running. All right, so if that is the case, right, let's map out the structure. Okay, now we've seen this. Okay, now see this market here. Look at the structure of market. If we mark from here, if you are seeing the structure, you're seeing lows, highs, right? Okay, market created lows again, highs, coming lows. You can see that this is straight a downtrend. Now, what happened here? There was rejection, right? Price actually rejected here, and price break structure. This is the high that confirm a change of character. You have to train your eyes to see these things. Confirm this change of character. Okay, and how do I know is an high? This is how you understand an high. Know a high, and you also use it for confirmations. Okay, it's also a confirmation entry. So let me just put it out. It's confirmation entry when you are trading market. Okay, when market is actually retracing, or when market retraced, either reversal, retracement want to start and the like. We want to see swing highs for swing lows for a highs will happen on support, on resistance. On resistance means you are looking for sales. Okay, you're looking for sales. Why swing lows happens at the low? So it's a 3 candle pattern formation. And you also see that one candle formed where the wick or the body is higher, and the second candle, that the middle candle rather, is higher. Okay, whether the body or the wick passes through it will be higher, and you want to see this on the left hand side and see this on the right hand side. Okay, that is what forms swing high for you. And similarly also for swing lows, you want to see it forming like this. Okay, you want to see lows, something like a sharp movement, like a quick run away. Okay, like a quick run away. You want to see that market just do quick run away, right? So this is, if you see this here, let me expand it so you can see what I'm saying. So you can see this candle, you can see this one, you can see this one. Because at the wick of this candle is longer, right? That the middle candle is longer. So that becomes my major high. Now, market tell me it changed direction. Now, how do I want to confirm that it's actually a change of character? Until I see another retracement that break high. And now what happens? See this retracement coming down here. Now your retracement must come as low as 50% of the impulsive movement. Okay, as low as minimum of 60% or 48% averagely. Okay, now if you take a Fibonacci tool, if I mark from this low, so you can mark from this low. Okay, can mark from this low because this is where but let me just mark from this low. Okay, to this high. You can see that this is average of about 48, because this is 50% Fibonacci, right? So average of about 48, but there are things you will see, because markets can be so funny at times. That's why you see that people say that it did not tap into my entry and it go massively. Those are some of the things that happen, but subsequently we will see them, why it goes like that. If you see this now, you see that this is 3 candle pattern formation. This is a swing low, 1, 2, 3. This is a swing low, and the market got after it. So for those people who want to, let me just drop this. You can just, I'll do another video on it. You can how to enter with swing lows and swing highs. Subsequently, you will see a video without that. So 1, 2, 3. I use it for confirmations very well. So you can also note it down now. I'm using it. 1, 2, 3. After the third candle has been formed, you enter at the third candle, end of the close of the third candle, and you put your stop loss below the lows. If you check through, you will see it repeating itself. Okay, if it's a swing high, you can see now when this market actually move high here. Okay, so now see this swing 1, 2, 3. The third candle. After the close of the third candle, what happened? You sell. But this retracement didn't go long, so it didn't go long. Now this is what now I see that this retracement did not go long. So probably you were expecting that the retracement will come as low as, if we are to expect retracement normally, we expect retracement to come as low as here, right? Before market actually pull up and continue in that direction. Now, until market takes out this low, market has not changed direction. So even if we are seeing some things like market forming consistent lows here, so that we read the market in context, okay, in context. So now the market fails to come very low. It created this one. This one now, if I see this one that's not up to 50% retracement or 48% retracement, I will call it an inducement straight away. Until I see something else. Like if I call this an inducement, I'll be expecting at this low. This low that created here like this and created this high low before it was taken out. That before it was taken out like this. We assume that we would not see this, right? It actually created a high. That means it broke structure to the upside like this. Now, after breaking straight to the upside and creating this high, right? It's created a major low, another low. From this high to this high, this one is up to 50%, right? But you cannot take it as a major low because the initial low that produces this low was not up to 50% or 48% of the impulsive movement. But this was the impulsive leg. From here to here is the impulsive leg. So when price actually do this, what will be doing, taking your mind straight is, okay, this will be taken out. And what happens? Market actually take it out. But we are told that the taking out should come to this place or somewhere close here, right? Somewhere here. right? But which is what later happened here, right? Now, but price did not get there again, because if I take my Fibonacci retracement and pick again from this high to this low, right? From this low to this high rather, sorry. Please include the wick of the candle when you are marking your Fibonacci. Okay, so sorry. Sorry, just give me 1 minute. I think my shot like this. Let me pick my Fibonacci tree again. So if I mark like this, right? Now, okay, good. So this one already come into the 50%. Because that this one did not get to the 50%. So automatically I expect this place to be taken out as inducement for me. But now see what market did. Market actually come again after now take it out. Now that I took it out, now the structure we'll be looking out for. If you draw the structure now, you see that market created let's the schematic out so you can play here. Created this, right? Created this, which was not to 50% of the candle of the impulsive movement, right? Created this. Now this one take it out. You can see that this already form M, which shows that market may want to sell. So what should come to your mind straight away is that we either want to see a retracement that a market have take above this, taking the fact that you are taking here as your inducement, right? And possible there's a reason why market actually moved here, which I'm seeing currently, but I don't want to tell you for now. We'll see it in subsequent video. All right, so when you see the market actually moving like this, right? But if you are smart, you will cite it. So you expect the market will actually continue in its uptrend, right? Or based on the structure result, you want to see the market fails to break here, right? And then come down again and see what the market reach here, okay? And did what? And break down. And this becomes a break of short for you. So I can as well now, at this point when I'm seeing this structure, I can see, okay, this can be my change of character now. So I understand the market will change direction. And then my movement, okay, my movement, then my retracement, then I'll be able that the next one, market will retrace again. So the market retrace again. So at this retracement that me, I will be looking for my confirmation and see my confirmation. 1, 2, 3. A swing high, a swing high. See how market did it. 3 candle pattern formation. 1, 2. The middle candle with a longer wick. The third candle close below it or closes and is not forming above this candle. Okay, because at times the candle may not form below this low, but in most cases, most effective one that you see that the market actually close above the third candle, right? It's 3 candle pattern formation like this. 1, 2, 3. So market form below it. This become my entry. Here can be my entry. Here my stop loss will be here. Then I will target here as my TP1. Instead, the market keep changing direction and see. Since I see that market is actually in an uptrend, okay, so I'll be targeting. I don't want to see this price taken out, but I'll be watching. You can mitigating your stop losses, okay, if you like. But I'll be watching this place or this major low, right? This is the major low, right? I want to see it. So what happened? Market did what? Created a low here, right? Created another high, another low. So let's shift the price and see what happened. And see what market did. See what market did. This becomes a U-turn. That shows that the market here is still what? Is still bullish. And see what market did. Took it out. Break the structure here. Right? Take it out. Retraced. And what happened to market again? You can see how market is going bullish. Bullish. And so this is how you read the chart. This is how you read the chart like that. Basically, this is how you read the chart. And this was wow. This is gold. So now I see that gold is actually bearish. Okay, yesterday Monday we took this market. Okay, this was Monday market. We took this buy. This is Tuesdays. Today is 15th. I think I posted this on the group. If I posted this on the group, if you notice I posted this on the group, and you see market here. Market is coming straight down here. So what are we expecting in this type of market now? We'll be anticipating retracement, right? But once this market coming, this is still a protected low. Okay, still a protected low. And if we take this as a major low or first low, we might be expecting that price should do something like this. Let's say we have a low, a high, a low, and equal highs. Okay, market did what? This, which already formed an M to show me that market is changing direction. Oh, sorry. Then what did I do? This I now market created a minor high. This I now very small here. Okay, I should think straight and know that it's going to be an inducement. Market will take it out. So if market does not create inducement for you, in most cases you will become the inducement. So market come here, market will take people out anyhow. Come here and then we shut down. We shut down. Why did I put my TP here? Well, you can see this is where I set my TP, and it has taken me out and even come here because I know that this is a low here and there's a zone here. So market is reacting from here. So market might react from here. Gold. Market might react from here. Okay, and still continue to the upside, or it comes here. Okay, and continue downward. So we want to trade the market like the structure is telling you, but we are waiting for confirmation. I've given you one entry confirmation. One entry confirmation, that is your swing lows and swing highs. Okay, your swing lows for buy entrance, while your swing highs for what? For sell entry. So you want to see things in that nature. Okay, so without wasting much of our time, when do you on this? What do you which time frame do you analyze major structure? Number one, analyze your structures on higher time frames. Don't worry, in the next video of class we'll be explaining how structure align with time frames, or any of the classes, whichever one comes first. How structure aligns with time frames. Okay, we deal with candlestick and time frame, right? There's what called structures with time frame, how they align with different time frames. So we'll treat that later on. So you want to analyze your structure on higher time frame, like 4 hours or 1 hour. Okay, depending on the type of trader you are in. Okay, if you are a day trader, I bet I told you analyze on 4 hours to know the trend of the market. So same way you used to know this the structure of the market. Okay, so when you get to 1 hour or 4 hours, you draw your structure very out. Then you can now go to, like I said, identify the swing lows and swing highs. I've told you what swing lows and swing highs is. Swing lows and swing high are very, very important. They are very, very important in entry. Hey, don't joke with swing lows and swing highs. Don't joke with it. Alright, so mark your breaking structures, then wait for retracement to structure or zone, okay, before you actually pick. And once you see that retracement is coming, okay, when market is retracing, I told that how to know that retracement is ending is when it forms a swing low or a swing high. Okay, that's when you know that retracement has ended or is ending. Okay, be very, very careful. All right, so then your confirmations, after the swing lows and swing highs are confirmations for now until we teach you, or you can use your pin bar or hammer, any of those candlesticks pattern we treated on, right, as your entering signal. Okay, pin bar, hammer, or doji. Okay, they are very, very good for entering. Okay, so then you can go on 5 minutes or 15 minute time frames, that lower time frame, to confirm the structure align with the uptrend before you pick your entrance. Okay, then you pick your entries on lower time frame. So now, without wasting our time, go straight to assignment for this tutorial. The assignment is the fact that go on your market structure, right? Number one, go on TradingView or MetaTrader 5, anyone you feel like, draw out structures. Like read the structure of on higher time frame. Okay, pick a major pair like Euro USD or gold that I did here. If you like gold very well like me. So mark the last higher highs and higher lows. That means identify the higher highs and higher lows. Okay. Then identify the break of structures. Change your characters. Okay. And then pick out liquidity grabs. I think it was one liquidity grab that happened on Friday or so. On Friday or so. Let me check Friday. I think there was a liquidity grab of a trade on Friday that happens. Somebody was trying to pick a sell trade, and probably why market was actually bullish on Friday, right? I think yes, I think this was it. This was it. But I think it's more people on. Let me check 15 minutes time frame and see if I will see it. If I will see that more clearly. So the person was actually trying to pick, sent me a trade for a sell, and I was like, guy, this gold is bullish, oh. Even though it sold a bit, but it dealt with emotions, right? Oh, Friday. Where's Friday? Oh, I think I've gone too far. Let me see. Friday's date was everywhere I go, I'll see you right there. In the beauties of nations, you shine out. Oh, you are everything. Okay, good. So let me zoom in here. I think this is somewhere like this. So I think there was a. Let me delete this. I don't think we need it any longer. So we can see what I'm marking out, what I'm trying to explain. In the beauties of nations, you shine out. For you are everything, and everything is you. Precious Jesus, you're wonderful. Okay, I think this was the sell setup. Thursday, Friday, Thursday, Friday, Thursday, Friday, Thursday, Friday. Okay, this was Friday, right? Yeah, this was Friday. So was it Friday sent the chart of Thursday or so? Well, I think there was a sell set up. I think this was EA, right? This was where it picked the sell, something like that. And expect my, I don't know, I can't really pick it the trade, but market actually came and induced. Okay, good. I think I cited it. 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 Good. Now see the structure here. This was the market that the guy actually take, and was market was actually like this. So he expect market to actually, as market created this, expect market. I think he was expecting the price to I think it sold from here, right? And expect price to actually come down. But see what market, the market actually created this major low, took this out as inducement, took this out as break of structure, right? Higher high. Now taking out this low, I think the guy now confirmed here as a change of character here. I think that was the confirmation. The confirmation has change of character, and hope that market did this. Now market now also failed to break this high. So I think it sold here. Sold here, yes, here should have been the reasonable TP to an extent, but we are actually expecting that price will actually go lower. But see what market did. Market again failed to break this low. When you are seeing reaction that market fails to break this low, if I go on lower time frames now, you will see that this place now there will be a swing low. There will be a swing low. Okay. And market failed to break this and now what? Break higher. And this confirms that market is still bullish. and it was still bullish, and this was at that entry for swing low 1 2 3. Market created a low and created higher, break higher. So let me check something. So that is what price does. That is how price do. Okay, that's how price does. And that was how the guy was taking manipulated after the market. Okay, anyway, so that is it. That is it on introduction to forex, to market structure. So I hope you enjoyed this video. I hope you do. And if you have not subscribed, please click on the notification button, click on the subscribe button, subscribe, share. Let us reach more subscribers, help us to grow. Let's hit the 1K subscriber within short period of time, and more and more and more and more. Yeah. Alright, so till I come your way again, my name is Joseph Samuel, the lead instructor of SAFOREX Academy. I'll see you when I see you. Peace out.